Thank you, Matt. And Kate, it was brilliant listening to you. It was so informative. So I had a good time. Thank
Great.
you. So hi, everyone.
Sorry to interrupt. Just one thing, Kate, if you could throw in some of those last links that you said, I didn't get them all.
Sure,
About where people can get more information. If you could throw those into the chat, that would be great. Sorry for interrupting you, Garima. I just wanted to get that in for everyone, and I'll let you jump back into it. Sorry there.
Yeah, sure. No worries. So hi, everyone. Thanks, Matt, for organizing this event. It is, indeed very timely in light of how climate is affecting everyone. So as Matt pointed out, I am Garima. I work with the research and advisory team at CapShift. We are based out of Boston. We are an impact investing platform started 5 years back with a clear vision to mobilize capital for purpose. The aim was to basically test this theory that if we provide, charitable asset owners with an easy access to impact vehicles, would they put their money sitting in traditional investments into opportunities that would address societal issues, community needs, and climate change? And I'm happy to share that, at presently, we have partnered with more than half of donor advised fund providers in the US market with a simple idea to use charitable assets for impact investing. And what I'm going to talk about very briefly, and then we can just have a Q&A, because I think it's the most efficient and more productive way to talk about any topic. So what CapShift does is it acts as an institutional partner to these donor advised fund providers, wherein we offer a wide range of services related to impact investing. So there will be impact reporting. We will curate impact opportunities across asset classes, themes, geography. So like something like supply chain, sustainable fashion would be one of the core areas apart from climate, affordable housing, financial inclusion. So this basically gives the donors a holistic view of the whole impact investing space and the holdings they have. The good news is the demand for impact investing is strong and growing. It is said, I think, somewhere that 62% of millennials and nearly half of Gen X investors believe that impact investing has more power to create change rather than traditional philanthropy. And many are looking to incorporate impact investing into their donor advised fund. I do recognize that donor advised fund is not a very universal concept. It's a very UK, US, European concept. So it's basically, if I have to break down what a donor advised fund would be, it's like a giving vehicle, which allows the underlying donors to establish and fund the account by making irrevocable tax-deductible contributions to the charitable sponsor. And a regular function of a donor advised fund would be to do grant making, contribution, asset allocation. So what we are saying that, as an underlying donor, if you want to align your values and you want to align your charitable goals with your donations, you can actually also do it via investments. And that's why the whole idea is to use your charitable assets into impact investing. So for instance, let's say there's a donor who wants to build a climate portfolio. So there could be 3 ways to do it. The most simple way would be, the donor can start investing in the environmental public pool, or do a recoverable grant to a nonprofit, or just simply invest into a climate fund. And what we do here in CapShift, we have, for instance, partnered with one of our donor advised funds where we offer thematic impact portfolio across gender lens, environmental, equity, inclusion across the public assets. And then we also have a pre-screened curated menu for private impact investing. And these kind of options basically allow the underlying donors to use their values, to consult with their respective families, their financial advisors, and see how they can use their charitable assets to move towards impact investing. So, you can put your money with support clean energy transition across Southeast Asia, or you can put in your money in sustainable aquaculture farms. The good news is the universe of impact investing opportunities is getting bigger and bigger. And no matter where your donor advised fund is located, you can amplify impact by using your charitable assets for impact investing. So that's like a very quick overview of CapShift, of the overview of using donor advice funds for impact investing. Yeah. So if anyone has any questions, because I think a question answer would just help the conversation.
Sure. So trying to get my video to come on. All right. So, I'm not, you pronounce your name so much better than I did, which is sort of natural. So say it again, because I'm saying it Garima, but you're saying it better than me.
Garima.
Garima. Okay. So I have my accent wrong. Garima. I apologize for that.
No worries.
So, with CapShift, are you guys exploring any products that might be more accessible, and democratize investing and maybe away from charitable assets, right? So, like I have money in retirement accounts, right? So I might actually be able to meet your minimums for something like that. Can I, get that money advised by you or not? I mean, is there, and then and kind of a follow-up, like earlier we had a speaker tell us about in the Netherlands, they have like a biodiversity fund that's kind of like an ETF, but it invests in startups and things where you can really make an impact. And that has like a very low minimum. We didn't figure out if it's only open to Dutch citizens or who it's open to. So we need to do a little research, and we'll have that up on the website later. But yeah, like any products like that either you guys are doing or that about that can kind of, target investors with lower minimums. And if they have higher minimums, of course, they come to you right now.
Yeah, thanks for the question. So as I said, so the donor advice fund environment is pretty huge, and the amount of charitable assets it's sitting there without not being used for impact investing is also a huge market. So right now, I think it's only 2% of the assets which is being used for impact investing. I would say right now the focus is to, at least at CapShift, is to use these charitable assets for impact investing. And, you can start your impact investing journey with getting in one of the public pools as well. So if you have a DAF, for instance, if I have to take an example of National Philanthropic Trust, we have partnership with them where we have these thematic 4 pools, I would say. One is environment, second is gender lens, third is broad social, and fourth is more on an equity and inclusion perspective. You can actually start doing a bit by a bit of your DAF money into the public pools. And then once you want to do slightly higher, you can start with your private impact investing journey as well. And on your second question on the minimum, that's very specific to DAF provider. So like, for instance, Vanguard Charitable will have a slightly, maybe a higher minimum versus a community foundation will have a lower minimum. So that's why the market is pretty diverse and unique at the same time. And the fund, I think you're talking about, are they focusing on aquaculture?
So that was AquaSpark who spoke earlier as well. But I was actually, I don't know if it came up during the AquaSpark conversation or if it came up separately, but there was a Dutch fund that they do invest in AquaSpark. So you can, like, that fund, the Dutch fund, you can put in like 100 or 200 euros, into that fund. And then you get exposure to all of AquaSpark's investments, which is over 25, startups and Series A, B type of companies. But then you also get exposure to a bunch of other, positive things that have a positive effect on biodiversity. So I'm just wondering, like in the US, because you're Boston based, if there's a similar sort of product that can give you that wide ranging exposure to startups, because you need to you need to spread your bets on startups because it is a risky business, but you can have the potential for home runs.
Right, absolutely. And, circling back on Aquaspark, that is one fund we have actually very closely worked with. So big fan of Aquaspark and the work they're doing. In terms of like early startups, what I would say, so what we end up doing is doing a lot of diligence and actually advising clients or like focusing on these first time managers or like early venture funds, especially in the climate area, right? Who are backing these startups where the technology is not even proven fully or they have not even been able to show the revenue what is required. So if you're putting your money into one of these funds, which are backing these early venture startups, that's also another way of using your money widely enough and capturing a problem. So that's another way of, I think, looking at things, at least from our end here.
Got it. And just to clarify, was that philanthropic assets, or is that exposure with some of those you can have, retirement accounts or just general assets?
So right now, I think our focus is more on the philanthropic assets. And maybe, 5 years down the line, we just move across other spectrum as well. But right now it's charitable assets.
Yeah,
because,
well, there is, and there's really so much. There's so much that in the charitable assets. I mean, I think sitting in DAFs right now, you said only 2% is really truly impactfully invested, and there's $200 billion sitting in DAFs. So these are charitable assets that are sort of, in some cases, completely supporting something that goes 180 degrees against the charitable purpose that maybe the person wants to do, instead of doubling down on the philanthropic benefits and the societal benefits by investing in an impactful business. And if you go beyond the DAFs, I think if you talk about foundations in the US, now you're talking about $1 trillion or more. I think over $1 trillion sitting there. So you definitely have a big pool to work from, just sticking on the philanthropic side.
Yeah, and on the foundation side, I mean, we do end up working with foundations, but that's the side where we just provide research services to them. So for instance, if they're looking for like a diligence or, they are focusing on African market and they're like, what, we have a mandate to do climate investing in African markets. And so what would be the funds we should be looking at? How should we go about it? Or we just want to focus on first time managers. We just want to focus on India, for instance. So that's like another way of us working with foundations.
Cool. So, yeah, I'm not muted. All right. So, does anyone else have any questions for Garima that I didn't cover? Craig, are you raising your hand there, or are you just?
No, I'm stretching.
Cool.
I'm raising
Love
my
to
hand.
have you jump in.
Thanks, Garima, for a great presentation. So one question: what would be the tipping point? Because more and more foundations, it's still a small number of mission investors exchange, have moved to impact endowments. So like what is like the critical thing to move more, donor assisted funds and everything else? Like how can we get from 2% to 100% or 80% or 40%? Like what's the biggest obstacle that people think the returns are too low, they don't understand it, it's hard to change? Like what's preventing it from accelerating as quickly as the world needs it to?
Yeah, lovely question. Thank you so much for that, Craig. Well, I think one of the reasons is education and knowledge sharing. A lot of donors, they are still not aware of the idea that, apart from your regular charities and donation and grants, you can actually use this money for impact investing. So I think that's one of the biggest things, at least in the US. Second, from a DAF provider perspective, they thought that it could be like quite a long journey, a very cumbersome journey to do all these operational stuff. And that's where player like us, like what we do is basically help to make this process very easy for the DAF provider and for the underlying donors and their financial advisors as well. So that's the second point. Third is that they are not aware of how wide the opportunities are within the impact space. So it's just not your regular PE VC, making investments into a certain sector. There is like quite innovation around, like whether it's US, whether it's global South, whether it's around agriculture, whether it's towards soil health. So these kinds of options is something what people are not aware of. And it could be like, let's say you are interested in only affordable housing. There are a wide variety of options apart from other affordable housing as well. You can go as narrow as you want, and you can still use your charitable assets for impact investing. So these are the three reasons I would see as the barriers. But having said that, I am pretty optimistic that people have started to think more, towards impact investing, towards certain themes, taking climate change very seriously, and ready to take the risk as well.
All right, I'm going to come off mute just for a quick second. I don't know if sirens are going to start again here. There was a traffic accident outside the room where I'm in, so a little background noise there. But I see Kate has her hand up, and so let's get to her.
Hi, thanks so much. Thank you so much, Garima. I have a question, which is, we've seen billions be invested in companies like Twitter, which I love, but nevertheless, like Uber and WeWork and you name it, run by white Western American men originally. And so I worked in the Silicon Valley, and I've seen the sort of confidence and bluster that led to that investment. Despite those business models, sorry, my point on all of them is not being profitable. So you just mentioned, there's hesitancy because of a lack of returns. My point is there's been billions invested in companies that were not profitable for a long time anyway. So the irony that something much smaller asking for a lot less money can't get it, which might be profitable faster than WeWork was, or Uber, or you name it. So do you have any thoughts on how startups can position, or projects you're talking about, impact investing opportunities can learn from that marketing, or whether we call it bluster and bluff, so to speak, to actually access, as you're saying, a lot more funds? Because that's a question I have. We need to get over that. We need to see some of that money coming the way you're talking about. Thank you.
Right. Thank you, Kate, for the question. Well, I think my instinct would be to say that the time when these guys were raising money was at least a decade back. In last few years, at least, things have changed quite a bit from an investor sentiment. People have started to, actually, there are clients who have started to ask, we want to see this kind of equity at a board level or an investment committee level while you're considering a fund or like an investment opportunity. So that's like one big sentiment which has moved from what was, let's say, 10 years back versus now. And then there are like initiatives which are focusing on, and it's very good to see that there are funds which are just female-led, and they are focusing on women-owned early startups, whether it's a specific geography or whether it's a specific impact theme. So things are changing. It's not as fast as people like, you and me would like, but at least it's not even conversation. There is a high demand, even from an LP perspective, to see funds, to see investment opportunities which are diverse, which are focusing on a particular community, which are focusing on a particular region or a crisis. And like, for instance, when COVID happened, one of the big funds, for instance, UNICEF came up with a fund called UNICEF Bridge Loan Fund, which actually kind of, tries to target and help people when they were going through COVID-19 crisis.
Wonderful.
So I am optimistic, and I know the track record of a management team matters, and people are looking, but they are also looking beyond where you are coming from in terms of your pedigree. I hope that answers.
No, great. And I think the more we talk about it, so people do increasingly look beyond, as you say, the more we'll hopefully see those investments. Thank you.
You're welcome.
Yeah, great question, Kate, and good answer there. And I'm going to sort of piggyback on some of that. So we had Sarah Nolette from Tenacious Ventures, based out of Sydney. She's American, but she spoke earlier about the ag industry that they're investing in. And one thing she sort of touched on, alluded to, was sort of form over substance. So she actually started her fund after she was a judge on a pitch contest, and there was a very smooth, polished pitch with the traditional guys and, you know, bells and whistles. And then there was another one, a woman founder, I believe, who wasn't quite as polished, maybe didn't have the traditional bells and whistles, but she showed that she really knew the substance of her industry. And so she, Sarah voted for that startup, and so did, actually, it turned out, her co-founder. It wasn't co-founder at the time, but her, you know, he was also on the panel. And then the other judges all went with the smooth, polished, you know, one that she, quite frankly, I think didn't feel had as much substance behind it. So fast forward 6 years later, and that's one of the best performers in her portfolio. And I don't think she invested in the other one, but they're out of business. So yeah. So anyways, don't get caught up as an investor too much on form over substance. You know, look at the substance of things. With that being said, you know, someone who is able to execute on the expected form, you know, you have to give them a little bit of credit for that execution, in my mind, but don't get caught up in that. You know, just because they executed on that doesn't mean they have the substance behind them. And you know, so I think keep an open mind. You know, there's a lot of good ideas out there, and there's a lot of people who, you know, not just beyond a good idea, but have quality teams and are willing to put in the effort and know how to execute and know their markets and know, you know, how to build the product and everything it takes to be successful. So I would recommend keep an open mind on that. Garima, pleasure having you and CapShift and wonderful work you guys are doing. And I want to explore things a little bit more with you offline as well. You know, when I get a little bit of sleep under me and, you know, but now if you don't have anything to add, we're going to move on to Craig Zelizer. And he's going to actually provide some investor tips as well. And, you know, thanks everyone so far for their participation and their, you know, sort of collaborative efforts making this, my screen's jumping around on me, but yeah, cool. So any last words, Garima?
Yeah, no, first of all, thank you so much again, you know, for hosting this event. Super exciting. And secondly, I would just say that across asset classes, across different teams, geographies, you can actually use your money and, you know, get your returns, also make an impact and feel good about the legacy you leave behind. So yeah, thank you.
Awesome. Awesome. Craig,